Question 1. What is a critical factor in determining whether a business interruption loss is covered under a cyber insurance policy? A. The cause of the interruption is external, such as a natural disaster. B. The interruption is a direct result of a cyber incident covered under the policy. C. The business has a pre-existing insurance policy that includes business interruption. D. The interruption occurs during non-business hours, minimizing financial loss. Answer. B. The interruption is a direct result of a cyber incident covered under the policy. Explanation. Business interruption coverage in a cyber insurance policy typically covers the loss of income due to a cyber event, such as a ransomware attack which disrupts the company's operations. For the loss to be covered, the interruption must directly result from a cyber incident specified in the policy. This includes disruptions like network downtime or data breaches affecting the ability to operate normally. Option A is incorrect because while natural disasters can lead to business interruptions, this would typically fall under general property insurance, not cyber insurance. Option C is incorrect because the mere presence of a general business interruption clause in another policy does not guarantee coverage under cyber insurance for cyber incidents. Option D is incorrect because the time of day does not affect the eligibility of a business interruption claim due to cyber incidents. Question 2. Scenario. Mr. Thompson is the Chief Information Officer at a large healthcare provider. Recently, his company suffered a data breach involving patient records, which included sensitive personal data. The breach was caused by a targeted phishing attack. Mr. Thompson is aware that his company holds a cyber liability insurance policy. Which of the following steps should Mr. Thompson take first to mitigate the situation and comply with regulatory requirements? They notify affected patients about the breach and offer free credit monitoring. B. Conduct a forensic investigation to determine the scope and origin of the breach. C. Immediately notify law enforcement and regulatory authorities about the breach. D. Ensure that the insurance provider is notified to initiate the claims process. Answer. B. Conduct a forensic investigation to determine the scope and origin of the breach. Explanation. In the event of a data breach, especially in the healthcare sector, the first and most critical step is to perform a forensic investigation to understand the full scope of the breach. This allows the organization to assess the extent of data compromised, the origin of the attack, and to identify any further vulnerabilities. A clear understanding of the incident is essential for compliance with regulatory frameworks like HIPAA, Health Insurance Portability and Accountability Act, and for informing next steps, such as notifying affected parties and mitigating damages. Option A is important but should follow the investigation. Offering credit monitoring or similar services is part of the mitigation but can't be done before understanding the breach's scope. Option C is necessary, but typically follows the forensic investigation. Law enforcement and regulators need a detailed report before being notified. Option D is important for initiating the claims process, but does not come before understanding the scope of the breach and taking the appropriate actions. Insurance providers often require a clear understanding of the event to assess the claim properly. Question 3. Which of the following factors is most likely to increase the premium of a cyber insurance policy? A. The company has a history of prior cyber incidents resulting in several claims. B. The company has a comprehensive employee cybersecurity training program in place. C. The company uses multi-factor authentication for its internal systems and employee access. D. The company operates in a low-risk industry such as agriculture or construction. Answer A. The company has a history of prior cyber incidents resulting in several claims. Explanation. A history of prior claims particularly related to cyber incidents increases the perceived risk to insurers, leading to higher premiums. Insurers factor in past claims to assess the likelihood of future incidents as frequent claims signal vulnerabilities within a company's cybersecurity framework. Option B is incorrect because a strong cybersecurity training program can help reduce risk, potentially lowering premiums by demonstrating a proactive approach to mitigating cyber threats. Option C is incorrect because multi-factor authentication is a best practice that strengthens security and may even help reduce premiums as it demonstrates the company's commitment to safeguarding against cyber threats. Option D is incorrect because the industry type alone does not automatically result in low premiums unless it is coupled with strong cybersecurity practices. Even low-risk industries are increasingly targeted by cyber criminals, particularly as they digitize their operations. Question 4. Which of the following is typically excluded from cyber insurance policies related to data breach claims? A. Costs of notifying affected individuals and providing credit monitoring services. B. Fines and penalties from regulatory bodies, such as those imposed under the GDPR. C. The cost of recovering stolen data through ransomware payments. D. Expenses associated with legal defense related to a privacy violation claim. Answer: B. Fines and penalties from regulatory bodies, such as those imposed under the GDPR. Explanation: cyber insurance policies generally cover the costs associated with the breach, such as notification costs, legal defense, and data recovery expenses. However, regulatory fines and penalties, especially those resulting from non-compliance with laws like the General Data Protection Regulation (EDR) or the California Consumer Privacy Act (CPA), are usually excluded. Option is incorrect because notification costs and credit monitoring services are typically covered under data breach insurance clauses. Option C is incorrect because cyber insurance policies often cover the cost of recovering data, including ransom payments, provided that such coverage is specified in the policy. Option D is incorrect because legal defense costs associated with defending a claim following a privacy violation or breach are often covered by the policy. Question 5. Which of the following best describes the relationship between cyber insurance and a company's existing general liability policy? A. Cyber insurance is a supplementary policy that only covers cyber-related events and it does not overlap with general liability coverage. B. Cyber insurance provides broader coverage, including general liability claims arising from physical accidents. C. General liability policies automatically cover cyber-related claims, so no additional cyber insurance is needed. D. Cyber insurance is the primary coverage, with general liability serving as a secondary backup for non-cyber events. Answer: A. Cyber insurance is a supplementary policy that only covers cyber-related events and it does not overlap with general liability coverage. Explanation: cyber insurance is specifically designed to cover risks related to cyber threats such as data breaches, network intrusions, and cyber extortion. It is a specialized insurance that supplements, rather than overlaps with, general liability policies. General liability insurance covers traditional risks, such as bodily injury and property damage, but does not cover cyber risks. Option B is incorrect because cyber insurance is a more specific coverage and does not extend to physical accidents covered by general liability policies. Option C is incorrect because general liability insurance does not automatically cover cyber-related incidents. A separate cyber insurance policy is required for such coverage. Option D is incorrect because cyber insurance is supplementary to general liability, not the primary coverage. Question 6. Scenario: Mr. White, the owner of a small e-commerce business, has recently decided to purchase a cyber insurance policy. He is concerned about the financial implications of potential data breaches and cyber extortion attacks. His business handles a large volume of customer credit card transactions. Which of the following factors will most likely affect his premium rates for cyber insurance? A. The volume of customer data processed and stored by the company. B. The number of employees working remotely from home. C. The company's choice of hosting provider for its website and e-commerce platform. D. The implementation of a strong password policy across all employee accounts. Answer: A. The volume of customer data processed and stored by the company. Explanation: the amount of sensitive data a business processes and stores directly impacts the risk assessment for a cyber insurance policy. A large volume of customer credit card transactions and sensitive personal information increases the potential for significant financial damage in the event of a breach, leading to higher premiums. Option B is incorrect because while remote work introduces additional cybersecurity risks, it is not the primary factor in determining premiums. Remote work is just one part of the overall risk assessment. Option C is incorrect because while the choice of hosting provider is important, insurers primarily assess the volume and sensitivity of the data, not the service provider, unless there are specific issues with the provider's security protocols. Option D is incorrect because implementing a strong password policy is a positive security measure but is less likely to significantly affect the premium rate compared to data volume. Question 7. What is the primary purpose of a cyber insurance policy's data breach response clause? A. To cover the costs of compliance with government data privacy regulations. B. To fund the investigation and containment of the breach, including notifying affected individuals. C. To cover the legal costs associated with defending against claims filed by customers. D. To automatically notify regulatory authorities and stakeholders on behalf of the policyholder. Answer: B. To fund the investigation and containment of the breach, including notifying affected individuals. Explanation. The data breach response clause in a cyber insurance policy typically covers the cost of responding to a data breach. This includes funding the forensic investigation, mitigating the effects of the breach, and notifying affected individuals. It ensures that the company can act swiftly to contain the breach and comply with legal obligations. Option is incorrect because compliance costs are not the primary focus of the data breach response clause, though they may be covered under a separate policy provision. Option C is incorrect because legal defense costs are generally covered by separate liability clauses, not the breach response clause. Option D is incorrect because while notification is a part of the response, the insurance policy typically does not directly notify authorities. For the policyholder, the insured must take action. Question 8. Which of the following is a key feature of cyber insurance that distinguishes it from traditional insurance policies? A. Coverage for regulatory fines and penalties resulting from a data breach. B. Automatic coverage for any cyber-related claims regardless of the cause. C. High premiums that are standard for all policyholders regardless of risk. D. Coverage for third-party losses such as damages from a denial-of-service attack affecting clients. Answer D. Coverage for third-party losses such as damages from a denial-of-service attack affecting clients. Explanation. Cyber insurance is unique in that it covers both first-party and third-party losses. Third-party coverage typically includes legal liabilities and damages resulting from a cyber event, such as a denial-of-service DDoS attack that affects a company's clients. This coverage is crucial for businesses that provide services or products dependent on their online infrastructure. Option A is incorrect because regulatory fines and penalties are often excluded from cyber insurance policies, especially in cases of non-compliance. Option B is incorrect because cyber insurance does not automatically cover all claims. The coverage depends on the terms of the policy, including exclusions and limits. Option C is incorrect because premiums are based on the risk profile of the business, including factors such as cybersecurity measures in place, industry, and claim history. Question 9. Which of the following is a common exclusion in most cyber insurance policies? A. Financial losses resulting from a cyber attack on a third-party service provider. B. Coverage for data recovery costs after a ransomware attack. C. Losses caused by employee negligence, such as accidentally sending sensitive data to the wrong recipient. D. Coverage for a business's own legal defense costs after a privacy violation claim. Answer. C. Losses caused by employee negligence, such as accidentally sending sensitive data to the wrong recipient. Explanation. Many cyber insurance policies exclude losses resulting from employee negligence, including mistakes such as sending sensitive data to the wrong person or failing to follow proper security protocols. While these actions may lead to a breach, insurers may not cover the resulting costs if they are deemed to be due to employee error. Option A is incorrect because many cyber insurance policies do cover losses resulting from third-party breaches or attacks, depending on the specifics of the policy. Option B is incorrect because ransomware attacks and data recovery costs are often covered under first-party cyber insurance policies. Option D is incorrect because coverage for legal defense costs related to privacy violations is a common feature of cyber liability insurance policies. Question 10. What is the impact of the cyber maturity of a business on its cyber insurance premiums? A. Higher cyber maturity typically results in low premiums due to the reduced risk of a breach. B. Lower cyber maturity results in a higher premium because of the increased likelihood of a cyber attack. C. Cyber maturity does not affect premiums as all businesses are viewed equally by insurers. D. Higher cyber maturity results in higher premiums due to increased coverage needs. Answer A. Higher cyber maturity typically results in low premiums due to the reduced risk of a breach. Explanation. Cyber maturity refers to the level of security measures a business has in place to prevent cyber incidents. Businesses with higher cyber maturity, meaning they have strong cybersecurity practices such as firewalls, encryption, and employee training, are seen as low risk by insurers. This typically results in low premiums because the likelihood of a breach or cyber attack is reduced. Option B is incorrect because businesses with low cyber maturity typically face higher premiums due to the higher perceived risk. Option C is incorrect because insurers assess cyber maturity when determining premiums, and businesses with better practices generally pay low premiums. Option D is incorrect because while higher cyber maturity might indicate a low risk, it does not necessarily result in a higher premium. Question 11. Which of the following scenarios would most likely trigger a cyber insurance policy's business interruption coverage? A. A company's website is defaced by a hacker causing temporary reputational damage. B. A ransomware attack locks a company's systems, preventing it from processing orders for a period of time. C. An employee accidentally deletes important data, causing a loss of access to client records. D. A customer sues the company for a data breach resulting from negligence in handling their information. Answer: B. A ransomware attack locks a company's systems, preventing it from processing orders for a period of time. Explanation: business interruption coverage under a cyber insurance policy is designed to compensate for the loss of income resulting from a cyber event that disrupts normal operations, such as a ransomware attack that locks systems and prevents business activities. Option A is incorrect because reputational damage does not directly impact business operations and would likely not trigger business interruption coverage. Option C is incorrect because data deletion, while disruptive, typically does not cause an extended disruption to business operations to qualify for business interruption coverage. Option D is incorrect because legal costs resulting from a data breach are typically covered under liability coverage, not business interruption. Question 12. Which of the following is a key responsibility of an organization when purchasing cyber insurance? A. To purchase the highest level of coverage available to guarantee full protection against all cyber risks. B. To disclose all known security vulnerabilities and previous incidents to the insurer before purchasing the policy. C. To rely solely on the insurer to handle cybersecurity risk management and breach prevention. D. To avoid implementing any security measures, as the insurance will cover all potential breaches. Answer: B. To disclose all known security vulnerabilities and previous incidents to the insurer before purchasing the policy. Explanation: when purchasing cyber insurance, it is crucial for organizations to provide full disclosure of any known security vulnerabilities, previous cyber incidents, and ongoing risks. Failure to disclose such information could result in a denied claim if a cyber event occurs. Option A is incorrect because purchasing the highest level of coverage may not always be necessary and does not guarantee protection against all risks. Option C is incorrect because while insurers provide coverage, organizations are responsible for managing their own cybersecurity measures. Option D is incorrect because insurers expect companies to implement adequate security practices. The policy does not cover all potential breaches if no effort is made to prevent them. Question 13. Which of the following is generally considered a third-party claim under a cyber insurance policy? A. A data breach that exposes an organization's own customer data. B. A lawsuit filed by a vendor whose data was compromised due to the organization's inadequate security measures. C. A company's loss of revenue due to a cyber attack. D. An employee who accesses unauthorized data and causes a breach. Answer: B. A lawsuit filed by a vendor whose data was compromised due to the organization's inadequate security measures. Explanation: a third-party claim involves external parties, such as vendors, clients, or partners, who suffer damages as a result of the policyholder's cyber event. If a vendor's data is compromised due to the insured organization's security failure, the vendor can file a lawsuit, which would be covered under third-party liability. Option A is incorrect because the data breach involving the company's own data is typically a first-party claim. Option C is incorrect because the company's own financial loss from a cyber attack falls under business interruption or first-party coverage. Option D is incorrect because employee-related breaches typically result in internal claims and not third-party claims. Question 14. Which of the following best describes a cyber insurance policy's cyber extortion coverage? A. Coverage for the costs of responding to ransomware attacks, including payments to hackers. B. Coverage for fines and penalties resulting from a regulatory investigation after a data breach. C. Coverage for the cost of repairing or replacing damaged hardware after a cyber attack. D. Coverage for the loss of intellectual property due to a cyber attack. Answer A. Coverage for the costs of responding to ransomware attacks, including payments to hackers. Explanation: cyber extortion coverage is specifically designed to protect against cyber extortion incidents, such as ransomware attacks. Its coverage typically includes the costs associated with responding to the attack, including paying ransoms to cyber criminals, as well as the costs of recovery and negotiation. Option B is incorrect because fines and penalties are usually not covered under cyber extortion coverage, but may be addressed under other types of cyber insurance, such as regulatory fines. Option C is incorrect because damage to hardware may be covered under property or equipment insurance, not cyber extortion coverage. Option D is incorrect because intellectual property loss may fall under a different type of cyber insurance coverage, such as data breach or privacy coverage. Question 15. Scenario: a healthcare provider suffered a data breach where patient medical records were accessed by an unauthorized party. The healthcare provider has a cyber insurance policy. Which of the following actions is most likely required by the insurance policy in the event of the breach? A. The provider must immediately notify the insurance company and any affected parties. B. The provider must destroy the compromised records and cease all operations until further notice. C. The provider must negotiate with the hackers for the return of the data. D. The provider must pay all associated legal costs before filing a claim. Answer A. The provider must immediately notify the insurance company and any affected parties. Explanation: most cyber insurance policies require prompt notification of both the insurer and affected parties in the event of a breach. This enables the insurer to begin investigating the incident, mitigating the damage, and guiding the business through the necessary steps, such as notifying affected individuals. Option B is incorrect because destroying the compromised records would not be a recommended step. The priority is to contain the breach and assess the damage. Option C is incorrect because cyber insurance policies typically do not require businesses to negotiate with hackers. The policy helps cover the costs of dealing with the incident. Option D is incorrect because insurers generally cover legal defense costs, so they are not required to be paid upfront before filing a claim. Question 16. Which of the following would most likely be excluded from a cyber insurance policy? A. Data recovery costs following a denial of service attack. B. Costs associated with a company's failure to comply with data protection laws. C. Liability for privacy violations affecting customers' personal data. D. Legal fees for defending against a third-party claim for damages caused by a cyber attack. Answer: B. Costs associated with a company's failure to comply with data protection laws. Explanation: cyber insurance policies generally do not cover costs related to regulatory non-compliance, including penalties or fines resulting from a failure to comply with data protection laws such as GDPR or CCPA. Option A is incorrect because data recovery costs related to cyber attacks are usually covered under first-party coverage. Option C is incorrect because liability for privacy violations affecting customer data is typically covered under cyber liability insurance. Option D is incorrect because legal fees for defending against third-party claims are generally covered by cyber insurance. Question 17. What is the primary benefit of a cyber insurance policy's crisis management coverage? A. To cover the costs of restoring data after a cyber attack. B. To provide financial protection for legal claims related to intellectual property theft. C. To cover the costs of public relations efforts to manage reputational damage following a data breach. D. To cover the legal fees associated with regulatory investigations. Answer: C. To cover the costs of public relations efforts to manage reputational damage following a data breach. Explanation: crisis management coverage typically helps businesses manage the fallout from a cyber event, such as covering the costs of public relations efforts to handle reputational damage after data breach or cyber attack. Option A is incorrect because data restoration costs are usually covered under data breach or business interruption coverage. Option B is incorrect because intellectual property theft is generally covered under a different type of policy. Option D is incorrect because regulatory investigation costs may be covered under a separate legal liability policy. Question 18. Which of the following best describes a silent cyber risk? A risk that is explicitly covered under the cyber insurance policy. B. A risk that is not explicitly addressed by the policy, leaving it potentially uncovered. C. A risk that is automatically covered under both traditional and cyber insurance policies. D. A risk that is limited only to cyber extortion and ransomware attacks. Answer: B. A risk that is not explicitly addressed by the policy, leaving it potentially uncovered. Explanation: a silent cyber risk refers to a cyber-related risk that is not explicitly addressed in an organization's insurance policy, particularly in traditional property or liability policies. This ambiguity can lead to gaps in coverage for cyber-related incidents. Option A is incorrect because silent risks are not explicitly covered by the policy. Option C is incorrect because silent risks are not automatically covered by traditional policies. Option D is incorrect because silent cyber risks are not limited to a specific type of attacker. They are any cyber risks not explicitly addressed by the policy. Question 19. What factor is most likely to reduce the premium cost of a cyber insurance policy? A. A company's previous history of data breaches and cyber incidents. B. A company's implementation of robust cybersecurity measures such as firewalls and employee training. C. A company's decision to only purchase liability coverage without including business interruption coverage. D. A company's choice of a high deductible for the policy. Answer: B. A company's implementation of robust cybersecurity measures such as firewalls and employee training. Explanation: cyber insurance premiums are often low for companies that demonstrate a commitment to cybersecurity, including implementing robust security measures like firewalls, encryption, and employee training. These measures reduce the risk of a breach, leading to lower premiums. Option A is incorrect because the history of cyber incidents typically leads to higher premiums due to the increased perceived risk. Option C is incorrect because excluding business interruption coverage may reduce the scope of coverage but would not significantly impact premium costs in relation to security measures. Option D is incorrect because a high deductible may lower the premium slightly, but it does not have as significant an impact as implementing strong cybersecurity practices. Question 20. Which of the following best describes data breach notification coverage in a cyber insurance policy? A. Coverage that pays for legal defense costs when a company is sued for a data breach. B. Coverage that pays for the costs associated with informing affected individuals of a data breach. C. Coverage that pays for the cost of recovering lost or damaged data following a cyber attack. D. Coverage that automatically ensures compliance with regulatory data breach notification laws. Answer: B. Coverage that pays for the costs associated with informing affected individuals of a data breach. Explanation: data breach notification coverage helps businesses cover the costs of notifying individuals whose personal data has been compromised in a breach. This is an essential part of the response to a data breach, as many laws require timely notification to affected parties. Option A is incorrect because legal defense costs are typically covered under other liability clauses, not data breach notification. Option C is incorrect because recovering lost data is usually covered under data recovery or business interruption coverage. Option D is incorrect because while the coverage helps with notification, it does not automatically ensure compliance with data breach laws. Question 21. Which of the following is a common exclusion in a cyber insurance policy? A. Costs associated with system repair after a cyber attack. B. Costs related to reputational damage caused by a data breach. C. Losses resulting from employee misconduct, including insider threats. D. Costs related to data recovery after a ransomware attack. Answer: C. Losses resulting from employee misconduct, including insider threats. Explanation: cyber insurance policies often exclude losses caused by intentional misconduct by employees, such as fraud or theft of data by insiders. These are typically covered under other types of insurance, such as fidelity bonds. Option is incorrect because system repair costs following a cyber event are usually covered under a cyber insurance policy. Option B is incorrect because reputational damage may be covered under the policy's crisis management or PR coverage. Option D is incorrect because data recovery costs due to ransomware attacks are generally covered by cyber insurance. Question 22. What is the primary purpose of a cyber risk assessment in the context of purchasing cyber insurance? A. To identify vulnerabilities in the company's IT infrastructure and assess the potential exposure to cyber threats. B. To calculate the exact cost of the insurance premium based on the company's revenue. C. To assess the company's physical security measures such as building access controls. D. To evaluate the company's insurance history and determine the likelihood of previous claims. Answer A. To identify vulnerabilities in the company's IT infrastructure and assess the potential exposure to cyber threats. Explanation: a cyber risk assessment helps identify weaknesses in a company's cybersecurity infrastructure systems and data handling practices. This allows insurers to assess the level of risk associated with covering the company and helps the company understand its exposure to cyber threats. Option B is incorrect because the risk assessment focuses on vulnerabilities and exposures rather than calculating premiums directly. Option C is incorrect because physical security measures are not the focus of a cyber risk assessment, which focuses on digital infrastructure. Option D is incorrect because the primary goal is to assess vulnerabilities rather than reviewing past insurance claims. Question 23. Which of the following scenarios would trigger coverage under the network security liability section of a cyber insurance policy? A. An employee loses a company-issued laptop with sensitive client data on it. B. A denial of service DOS attack crashes a company's online service, disrupting its customers' ability to make purchases. C. An employee inadvertently shares a customer's personal information with a third party. D. A vendor's system is breached due to inadequate security, causing a data leak. Answer. B. A denial of service DOS attack crashes a company's online service, disrupting its customers' ability to make purchases. Explanation. Network security liability coverage typically covers damages resulting from external threats that exploit network vulnerabilities, such as a DOS attack. This coverage may also help with costs associated with business interruption and loss of revenue due to service disruptions. Option A is incorrect because lost laptops or devices are typically covered under data breach or property damage coverage. Option C is incorrect because unauthorized sharing of information is typically addressed under privacy liability coverage. Option D is incorrect because coverage for vendor-related breaches may fall under third-party liability or vendor risk management clauses. Question 24. Which of the following is typically covered under data breach response coverage in a cyber insurance policy? A. The costs of repairing damaged hardware or systems. B. The costs of hiring a public relations firm to mitigate reputational damage. C. The costs of negotiating and paying a ransom to cyber criminals. D. The costs of notifying affected customers and providing credit monitoring services. Answer. D. The cost of notifying affected customers and providing credit monitoring services. Explanation. Data breach response coverage is designed to address the costs incurred following a data breach, such as notifying affected individuals and offering credit monitoring services to mitigate potential identity theft risks. Option A is incorrect because system repair is typically covered under other sections of a policy, such as network security liability or business interruption coverage. Option B is incorrect because public relations expenses are typically covered under crisis management coverage. Option C is incorrect because paying a ransom to hackers is covered under cyber extortion coverage. Question 25. Which of the following is a key difference between a first-party and third-party cyber insurance claim? A. First-party claims are made by individuals or organizations that experience a direct loss, while third-party claims are made by external entities affected by the policyholder's actions. B. First-party claims cover damages resulting from third-party attacks, while third-party claims cover damages caused by the policyholder's actions. C. First-party claims are related to regulatory fines, while third-party claims are related to direct financial losses. D. First-party claims are typically more expensive to process than third-party claims. Answer A. First-party claims are made by individuals or organizations that experience a direct loss, while third-party claims are made by external entities affected by the policyholder's actions. Explanation. First-party claims involve direct losses suffered by the policyholder, such as the cost of data recovery or business interruption. Third-party claims, on the other hand, involve external entities that are harmed by the policyholder's actions, such as vendors or customers impacted by a data breach. Option B is incorrect because first-party claims are about the policyholder's losses and third-party claims are about external entities' losses. Option C is incorrect because both first-party and third-party claims may involve financial losses, but regulatory fines are usually excluded. Option D is incorrect because first-party claims are not inherently more expensive than third-party claims. Both types can be costly depending on the situation. Question 26. Which of the following is a standard or element included in most cyber insurance policies to cover the risk of regulatory fines? A. Crisis management coverage. B. Regulatory fines and penalties coverage. C. Privacy liability coverage. D. Data breach response coverage. Answer. B. Regulatory fines and penalties coverage. Explanation. Regulatory fines and penalties coverage helps cover the costs associated with fines or penalties imposed by regulatory bodies due to a data breach or failure to comply with data protection laws such as GDPR or CCPA. Option A is incorrect because crisis management covers the costs of managing public relations and reputational damage, not fines. Option C is incorrect because privacy liability coverage addresses the legal liabilities resulting from a data breach, not regulatory fines. Option D is incorrect because data breach response coverage deals with the cost of managing the aftermath of a breach, such as notification and monitoring. Question 27. Which of the following types of cyber threats is most likely to be covered under cyber extortion coverage? A. Phishing attacks aimed at stealing login credentials. B. Distributed denial of service (DDoS) attacks that cause service disruption. C. Ransomware attacks where hackers demand payment to unlock data. D. Data breaches resulting from unauthorized access to databases. Answer: C. Ransomware attacks where hackers demand payment to unlock data. Explanation: cyber extortion coverage typically covers incidents where cybercriminals demand a ransom, such as in ransomware attacks, in exchange for not destroying or releasing sensitive data. Option A is incorrect because phishing attacks generally lead to data theft or fraud, not extortion. Option B is incorrect because DDoS attacks usually disrupt services but do not involve extortion for ransom. Option D is incorrect because data breaches caused by unauthorized access are typically covered under data breach or privacy liability coverage, not cyber extortion. Question 28. What is the role of a cybersecurity framework in the context of a cyber insurance policy? A. To help the insurer assess the company's cyber risk profile and determine appropriate coverage and premiums. B. To provide specific coverage for compliance-related fines and penalties. C. To limit the insurer's liability in case of a cyber attack. D. To dictate the specific cybersecurity technologies and tools that must be implemented by the company. Answer A. To help the insurer assess the company's cyber risk profile and determine appropriate coverage and premiums. Explanation: cybersecurity frameworks, such as the NIST Cybersecurity Framework, help organizations assess and mitigate their cyber risks. Insurers often use these frameworks to evaluate a company's cybersecurity posture, which helps determine appropriate coverage and premiums. Option B is incorrect because compliance-related fines are covered under different provisions, not by a framework. Option C is incorrect because a cybersecurity framework is used for risk assessment, not to limit liability. Option D is incorrect because the framework provides guidelines for managing risk, not specific technology mandates. Question 29. Which of the following would most likely trigger coverage under a cyber insurance policy's data loss and restoration clause? A. A company's website is hacked, leading to the leakage of customer data. B. A company experiences a hardware failure that results in the loss of critical business data. C. A company suffers a denial of service attack that disrupts its operations. D. A company faces a lawsuit for violating customer privacy rights. Answer: B. A company experiences a hardware failure that results in the loss of critical business data. Explanation: the data loss and restoration clause typically covers the costs associated with restoring data lost due to system failures, human error, or other unforeseen events. A hardware failure that results in the loss of business-critical data is a scenario that would trigger this clause. Option is incorrect because data breach scenarios are typically covered under privacy liability or data breach coverage. Option C is incorrect because denial of service attacks are usually covered under business interruption or network security liability coverage. Option D is incorrect because privacy lawsuits are covered under liability coverage, not data restoration clauses. Question 30. Which of the following is an essential step an organization should take to ensure their cyber insurance policy remains valid after a breach occurs? A. Immediately pay any ransom demanded by cyber criminals. B. Inform the insurance provider of the breach as soon as possible. C. Refrain from disclosing the breach to affected parties until the insurance investigation is complete. D. Cease all operations to prevent further damage from the breach. Answer: B. Inform the insurance provider of the breach as soon as possible. Explanation: it is crucial for an organization to promptly inform the insurance provider of any breach to ensure the claim process begins and the policy remains valid. Timely reporting is a requirement for most cyber insurance policies to trigger coverage. Option is incorrect because paying a ransom is a decision the organization must make independently and it is not required for the validity of the insurance policy. Option C is incorrect because failing to notify affected parties could violate legal or regulatory obligations, depending on data privacy laws. Insurers also require transparency during the claims process. Option D is incorrect because halting operations entirely is not typically required to ensure policy validity and may exacerbate business losses. Instead, mitigating further damage while following the insurer's guidelines is crucial.